Hi, I'm Sean Higgins. Thank you so much for tuning in. By now, you've received some great tax lien training. Today, you're going to learn how you can greatly accelerate your financial success and build an impenetrable financial fortress that'll help you secure total financial freedom forever, so you'll never have to worry about retirement money ever again. You've heard Tony and I speak highly of the Qualified Retirement Plan, or what's called a QRP, and I'm sure you're curious and excited about how this will benefit you and your family's financial future. So let's begin with some important facts about qualified retirement plans. Fact number one, QRPs have been available in America for over 40 years. They're not new. And exactly like IRAs and 401ks, the rules and regulations for QRPs are written into the IRS tax code. Fact number two, unlike IRAs, you will never have to pay management fees or administration fees to anyone ever again, because there are no management fees or administration fees with a QRP. Fact number three, the government gives you a financial credit which offsets your one-time setup fee for your QRP. In essence, the federal government gives you money to help you set up your QRP. Fact number four, QRP gives you superior asset protection. There's literally no better entity to protect your valuable assets than a QRP. When you set it up correctly, no one, and I mean no one, can touch your assets in a QRP. Not creditors, not a lawsuit, bankruptcy, or even the IRS. Your cash, real estate, tax lien certificates, stocks, bonds, and all other assets in your qualified retirement plan are completely safe and untouchable, unlike an IRA where all of your assets are always at risk. Fact number five, you and you alone control your money in your QRP, and you determine which bank you want it in. Fact number six, you have the ability to leverage real estate in your qualified retirement plan with absolutely no tax consequences. This is not possible in an IRA. If you leverage real estate in an IRA, you will definitely have tax consequences. Fact number seven, your qualified retirement plan gives you complete flexibility on controlling the type of asset you hold within your retirement account. You can hold tax lien certificates, real estate, gold, stocks, bonds, etc. What's important here is the fact that you control the type of asset in your retirement plan. Fact number eight, you have absolute flexibility on how much money you can contribute yearly. You can put any amount from $0 up to $50,000 per year without tax consequences. With an IRA, the maximum contribution per year is only $5,000. Anything above that and you will have tax consequences. So you can contribute 10 times more per year in your qualified retirement plan than you can in an IRA without tax consequences. Fact number nine, you have complete and immediate access to your retirement money for investment purposes, which means you don't have to fill out any paperwork to access your own money, or get permission from an outside trustee, or get approval from an administrator for the type of investment you want to make. This is not the case with an IRA. Even with a self-directed IRA, you have to go through a third-party administrator, and most of the time, you have to get approval for the type of investment you want to make. Fact number 10, and listen to this carefully because it's a big deal. You can also borrow your own money from your qualified retirement plan with no tax consequences, which means you become your own bank. And again, this isn't possible with an IRA. These are just a few of the benefits you'll enjoy when you have your own qualified retirement plan. As you can easily see, a QRP is a superior retirement plan for your current and future financial success. Before we discuss QRPs in complete detail, for clarity, qualified retirement plans are not a type of retirement account. Many retirement accounts are qualified retirement plans, like a 401k, 403b, 457. You've probably heard of some, if not all of these. It's important for you to know that an IRA is not a qualified retirement plan. I will explain that in detail in just a minute. What's most important for our discussion today is that you must have your QRP set up correctly in order to take advantage of all that a qualified plan has to offer. Today's presentation is going to give you absolute clarity and the resources necessary to get your QRP set up properly starting today. Yes, you can get started today. I'm also going to show you a comparison between investing with a taxable event versus investing with a non-taxable event, which will show you how dramatically that impacts your financial freedom by having your qualified retirement account work for you. I really want you to start thinking like this. Every time you make an investment, ask yourself, how does this investment benefit me and my financial future? If you follow that mantra, I will show you specifically how to retire comfortably and retire early with the lifestyle that you truly deserve. So let's get started. First, a little background on qualified retirement plans in my experience. My history and success with tax lien certificates is well documented. What a lot of people don't know is that my passion has always been about securing people's retirement years and giving people the option to retire early and retire rich so they can experience true financial freedom and simply not have to worry about retirement money ever again. Over the years, I became increasingly frustrated with how restrictive retirement accounts can be using a third-party administrator, which in turn restricts a person's earning capacity. In other words, they restrict a person from building true wealth in the shortest time possible with the best investment possible. This is not in the best interest of your financial future. Before Tony and I started investing in tax lien certificates together, I worked at New York Life. Part of my expertise was setting up retirement plans for large and small companies. One of the things I realized was that a large portion of the employees I dealt with felt that retirement plans were just another investment vehicle that they had no control over. Nothing could be further from the truth. And that's the type of thinking that frustrated me and motivated me to teach people the truth about creating financial freedom through the power of a qualified retirement plan. What was really ticking me off was most Americans, at least the ones I was meeting and the ones I've met over my 25 years in the financial industries, are led to believe that a retirement account is a form of an investment where they have extremely limited options and that it must be controlled by someone else, rather than an investment vehicle that you can and should control. People are led to believe that unless you have a self-directed IRA, which is not a qualified retirement plan, they can't have control of their retirement account. This is 100% false. This is what happens to many of us. We get a job that has great benefits, which includes a retirement plan. We're told if we invest X number of dollars, the company will match us. It could be a couple of years before they match us dollar for dollar, or what they call being vested. The challenge is when you get the retirement kit, it has a limited number of investment options. For this example, we'll use Fidelity. We'll have choices of, let's say, 20 mutual funds within Fidelity's family, and you can choose up to 5 of the funds out of the 20 for your retirement account. You're never given the option to invest in valuable real estate, tax lien certificates, or tax-deeded properties, silver, gold, and the list goes on and on. Then, if and when you leave that job for a better opportunity, like many people do, you're asked to roll over your 401k. So most people I've met go down to their bank, and their bank advises them to roll it over into a self-directed IRA, which means the bank is the third-party administrator and trustee. Many times the bank will waive their fees as long as you leave the money with them. Let's say the bank is working with maybe, I don't know, Franklin Fund or Merrill Lynch, and you see 20 funds there that you get to pick from and allocate your retirement money between these choices. Wait. This is exactly what I did before, and again, very limited option, third-party administrator and trustee. Investing in valuable real estate or tax lien certificates or tax-deeded properties, silver, gold, is never given as an option. This is the reason most Americans think a retirement account is actually an investment account, and they don't have a lot of control over how and what their money is invested in. People typically never say, but wait a second, can I actually use this money to invest in real estate? Or can I use this money to invest in gold, stocks, bonds, tax lien certificates? This rarely happens because it's never given to you as an option. Can you imagine an investment firm saying, we'll help you set up your very own QRP. Then you can invest in anything you feel is best for you and your family's financial future. And the best part is, you can invest in money in any firm you want, not just ours. This would never happen. Banks and investment firms basically will never recommend that you set up your own QRP because as soon as you have control of your retirement account, you can invest your money anywhere. So at that point, there's nothing in it for them. This isn't conspiratorial, it's just a fact. It doesn't benefit them financially, so they don't and they won't. Sound familiar? To many of my students, this is a very familiar story. When I first started investing in tax lien certificates, the first thing I wanted to do was use my retirement money. That's when I ran into a brick wall. I mean, not a little one, a big brick wall that seemed impossible to penetrate. It was extremely frustrating because I was dealing with some of the companies in the field like Pensco, InvestTrust, and the list goes on and on. They would set up a retirement account, but there were so many fees involved that it really became cost prohibitive to invest in tax lien certificates. Additionally, the red tape to do some of the transactions with my own money was absolutely ridiculous. I'm thinking to myself, it's my money, isn't it? So I became extremely frustrated with the entire process, but I refused to give up. I knew there had to be a better way. After researching what seemed like everybody in the field, I was introduced to Michael Haas, the founder of QRP and Associates. That's when I found not only the perfect retirement account that allowed me the flexibility to invest in non-traditional assets, eliminate fees, and eliminate third-party administrators, but I also learned the simplest, safest, and most effective way to set one up. The purpose of my presentation today is to set the record straight so that you know for a fact that you do have a choice. You can control your own retirement account 100%. Which gives you 100% control of your own financial success. The first thing I want to share with you is the advantages of having a QRP combined with tax lien certificates as your investment vehicle. What happens when you do this is your money grows incredibly fast, which greatly accelerates your financial success. For this example, we're going to invest $40,000 from your qualified plan into tax lien certificates, paying 18% annual return. After just 20 years, your account is worth $1.1 million. If you did the same transaction without a QRP for the same time period, you would end up with only $429,000, which is still a lot of money, but it's over $665,000 less than if you had a QRP. You literally lose $665,000 by not having a QRP. With a QRP, you put an extra $665,000 in your pocket. The choice really is yours. Do you want over $1 million or you just want $429,000? Here's the best part. You get a pick. Now, let's enhance this example by investing in just one tax deed property every 5 years. That's only 4 real estate transactions over the next 20 years. Let's assume just a $60,000 profit on each of these tax-deeded property deals. With your QRP, you now have over $1.9 million. Without the plan, you'll be taxed on all 4 deals, and you would have made $890,000 instead, which isn't bad, but it certainly isn't $1.9 million. Because you did the transaction in your QRP, you earned over $1 million more. Without a QRP, you literally are throwing away over $1 million. That's like putting $10,100 bills in a pile in a parking lot and lighting it on fire and watching it burn to ashes. The only difference in these two scenarios is who you wrote the check out to. Same amount of investment capital, same investment vehicle, same time frame, huge difference in your current and future financial success. Now that's the type of control that gives you ultimate financial security and financial independence. And we're just getting started. Here's another very important fact to consider when you're setting up your own qualified retirement account: the freedom of investment choice. What it really boils down to is that no one cares more about your hard-earned money and your financial freedom than you do. That's the single most important reason for setting up your own qualified retirement plan, so you can take great care of your own hard-earned money and control your own financial freedom. Now for this next example, I'm going to use a 401k QRP for the simple reason that our clients love this type of QRP and it fits most everybody's needs. Let me show you the power of your QRP. Let's assume that you have $100,000 in your retirement account. And regardless of whether you do or don't, it doesn't matter because you can scale this up or down for your own retirement account. So, you start with $100,000 in your retirement account. You find a property that you can acquire for $70,000, and it's a tax deed property. We have to rehabilitate it, and the cost of that is $30,000. So, you invest $70,000 to purchase the property, and it needs some work. We invest $30,000 to rehab the house. So you have invested all of your retirement money to complete this transaction. We started with 100, the house was 70, and the rehab was 30. Very straightforward. I want to keep the numbers simple. At the end of this process, the property has a current market value of $200,000. You sell the property at fair market value for $200,000. And obviously, all the money goes right back into your retirement account. I mean, what goes out must come back in. So, $200,000 goes back into your retirement account. $100,000 of that is pure profit. And because it's in your QRP, you have no tax consequences. This is a very typical transaction. If that deal was done in a normal retirement account that you did not manage, there would have been administrative costs, management fees, time constraints from paperwork, approval and disapproval process, and the list goes on and on. And some plans would not have even allowed the transaction to begin with. When you have your own qualified retirement plan where you're the administrator and you're the trustee, you'll never have any of these extra costs or time constraints because you control the account 100%. So far, so good. Now let me show you how you'll literally turbocharge your retirement account, which completely accelerates your financial success. In other words, you become extremely wealthy, extremely fast, with a high degree of safety. With a qualified plan, there is a little-known rule where you can leverage your money, which doubles the amount of money you have to work with within your retirement account without any tax consequences. Let me give you an example of exactly how this works. Let's use the same scenario. Let's say you have $100,000 in your retirement account. We find a property for $70,000. That's our purchase price. Same as the last example. Instead of using $70,000 from our QRP, we're going to use $50,000 of our QRP money. $20,000 is going to come from a bank. We still need to rehab the property. That money, $30,000, is going to come from the bank also. Same exact deal. We still paid $70,000. We still have rehabs of $30,000. The only difference is $50,000 or half the deal is coming from the bank and the other half is coming from our retirement account. If you didn't have a qualified plan and you did this transaction in a self-directed IRA like many people do, because the bank financed 50% of the transaction, what the tax code states is that you would leverage half of your account. So therefore, half of the profits would have had a tax consequence. In your qualified plan, you would have had a zero tax consequence. In a self-directed IRA, guess what? You pay taxes. So in other words, you still generate $200,000 on this transaction. 50 of this, retirement money. And 50 of this is the bank financing. And $100,000 is profit. This goes back into your retirement account. But because you financed half of the transaction out of your IRA and not your QRP, you are going to have tax consequence on half of the $100,000 profit. So you're going to pay taxes on $50,000 of the profit. But when you do this in your QRP, where you're the administrator and you're the trustee, there is zero tax consequence on any profit. I'm going to repeat that. This is important. When you do this in your QRP, where you're the administrator and you're the trustee, there is a zero tax consequence on any of the profit. So you can pay taxes on $50,000 of profit, or you can pay zero taxes on $100,000 in profit. What's important right now is this. From this day forward, you have a choice. I don't know about you, but when I'm dealing with my financial security and financial independence, I always want to have a zero tax consequence. Because you did this transaction in your QRP, and because you can leverage investing in real estate with your QRP with no tax consequences, you've just doubled the investment power, which is not possible in a self-directed IRA. I am confident you're getting extremely excited about what this means for your current and future financial success. And why not? This is big. At this point, I'm confident you love what you're learning because you must realize how significantly this impacts your financial success. An important question I receive about QRPs is what type of flexibility do I have for the type of investments I can hold in my QRP? Or bottom line is, what am I allowed to invest in? And this is a great question. The best way to answer this question is to ask what I can't invest in rather than what I can invest in, because you can pretty much invest in anything you want within reason. Let me explain. My rule of thumb I always share with my clients is this. If you're personally using the investment, then you can't do it. What do I mean by personally using it? Well, let's take a house, for instance. If I buy a house and live in it, I'm personally using it. So I can't use my QR money to buy my personal residence. If I buy a house and rent it out, I can do it because I'm not personally using it. It has to be something you're not physically using yourself. Sometimes it's easier just to look at it this way. I can invest in stocks, bonds, mutual fund, physical gold, silver, and obviously tax lien and tax deed properties. And you're always in complete control of your valuable assets. These are some of the more important guidelines on what you can and cannot invest in with your QRP. By the way, when you set up your qualified retirement plan with QRP and Associates, you're going to receive a comprehensive startup kit that explains all of this in complete detail. Many times at this point in my presentation, some of our students will ask, since a qualified plan is obviously the superior retirement account to have, why hasn't anybody told me about this sooner? Why hasn't my financial advisor, stockbroker, CPA told me about this? Why is the bank always recommending self-directed IRAs and not a QRP? The simple answer is this: there's just no money in it for them. There is no commission, no management fee, and no administration fees for them when you have your own QRP. They know when you're the administrator and you're your own trustee, they won't make any money on your transactions. And at that point, you can invest your money with anyone, which also takes money out of their pocket because you're not limited or confined to only using their services. It gives you options to look out for what's in your best financial interest, and they don't like that because it's not in their best financial interest. It's also about money under management for them. If you invest in their mutual funds, they make money. When you don't, they don't make money. And that's the simple answer. It's not conspiratorial. It's just a fact. There's no financial incentive for them to recommend that you set up your own QRP, which is ludicrous because there's no incentive for them to recommend what's in the best interest of your financial success. And there is an incentive for them when they recommend what's not in your best financial interest. And again, it's not conspiratorial, it's just a fact. It's also amazing how many times I've shared this strategy with people and have them say, well, my plan doesn't charge me any money. Most of the big companies out there, like American Funds, Fidelity, Schwab, Ameritrade, or any of them, they'll say, okay, listen, we'll set up and administrate and be your trustee for free. But the only problem is you're only allowed to invest in what they have to offer and nothing more. You have almost no flexibility whatsoever on what you can invest in, which is absolutely not in the best interest of your financial success. When these firms say they have no fees, this is a bold-faced lie. In fact, as of September 2012, the Labor Department has issued a new mandate. All administrators and trustees must disclose all hidden fees. The problem is these fees have gotten so out of hand, the Labor Department had to issue this law. Experts estimate that there are between $15 and $20 billion of these fees that will now be disclosed with this new law. You should be furious. You should be outraged. And if you think you're furious now, wait till you see how many hidden fees you're being charged. So, allow me to disclose all administrative and trustee fees associated with your QRP. Absolutely zero. Just so we're perfectly clear, you will never have any fees when you have your own qualified retirement plan, ever. It is literally impossible to have a fee. Why? Because you are the administrator and you are the trustee. You are not allowed to charge yourself any fees. I even had a student of mine once said, well, they don't charge me any money to manage my account. So I asked her to go back through her statements. She went back one full year of statements, sat on the phone with the administrator for 45 minutes, and calculated it to be over $1,500 in fees. That's $125 per month in fees. Obviously, you should have control over your own money, over your own investments, over your own retirement account, and your financial success. Most Americans simply don't know that they have a choice when setting up your retirement account. Now you know. and now the choice is yours. And I'm confident that you'll make the only choice that's in the best interest of your current and future financial independence, which is set up a qualified plan ASAP. The great news is, once your qualified retirement plan is set up through QRP and Associates, you're immediately the administrator and trustee of your retirement account. Therefore, you will never pay another management fee or administration fee ever again, and you're free to put your money in the investment that are in the best interest of your financial success. There is a one-time fee to set up your qualified retirement plan, and I will get to that shortly. The great news is the United States government helps you pay to set up your own qualified plan. In just a little bit here, I'm going to show you exactly how the government will pay a portion of your one-time setup fee. And from that point forward, you will never pay any other fees ever again. So there you have it. The bottom line is people aren't telling you to set up your own QRP because there's no money in it for them. Another huge benefit to having a QRP is complete asset protection. It's literally 100% bulletproof against ever being penetrated by anything or anyone. The IRS cannot touch your assets in a QRP. Bankruptcy cannot, and any other lawsuit can't, which means your valuable assets are never at risk and you are always 100% protected. There's absolutely no limit to the protection of your assets that are in a QRP. An IRA has very limited protection, and all of your assets are always at risk. Again, now that you're aware, you now have a choice. Protect your valuable assets 100% or have your precious assets at risk of being taken all day and every day. We have clients that, due to some unfortunate circumstances, had to file bankruptcy, which is devastating for anyone. But because they set up a qualified retirement plan, no one was allowed to touch the assets in their QRP. As a matter of fact, the only assets they had left to their name were those that were in the QRP. Without their QRP, they would have been left with zero. Let me share an important case study with you that clearly illustrates my point. It's a scenario that countless good people have found themselves in. One of our clients, a husband and wife team, ran into some unexpected challenges, as a lot of people do. The husband found out that he had some medical issues and couldn't work anymore. Soon thereafter, his wife lost her job. Unfortunately, they ended up having to file bankruptcy protection. The creditors in the bankruptcy court were going after their assets, their investments, and their hard-earned money in their QRP. The couple showed the bankruptcy courts 2 pages in their IRS-approved QRP plan documents, which were prepared by QRP and Associates, and those 2 pages clearly showed that 100% of the assets in that QRP were exempt from bankruptcy. After reviewing the 2 pages, the bankruptcy trustee said this retirement account is off the table. And at the end of the unfortunate ordeal, the only money they had left to their name was the money they had in the QRP. Just so we're clear, had this been in an IRA instead of a QRP, the creditors and the IRS could have taken all their money in their retirement account, which would have been a disaster. That's important and worth repeating. Had this been in an IRA instead of a QRP, the creditors and the IRS could have taken all of their money in a retirement account. Thank God they had a qualified retirement plan. When your QRP is set up correctly, no one, and I mean no one, can ever penetrate it. Your hard-earned money is always safe and protected. Unfortunately, catastrophe happens, and it happens to a lot of good people. And now you have peace of mind to know that if something unfortunate ever does happen, all of your hard-earned money in your QRP is always 100% safe and protected, which is priceless. Remember, this is your financial freedom at stake. This is the well-being of your family at stake. And now, with your QRP, even the most unfortunate circumstances and the most powerful forces can't touch your precious assets. You know why? Because it's against the law. So let's discuss more important details about your new QRP. First, let's discuss how much you can contribute on a yearly basis without tax consequences. We will continue to use a 401k QRP because it fits all of your needs and because of its flexibility. Let me explain in detail how that works. First of all, you can put up to $50,000 a year from your own income into your qualified retirement plan, depending on your age and your income, which is substantially more than you can with an IRA, which is limited to only $5,000 per year, and we'll get back to that later. So you can put up to $50,000 per person, which allows you and your spouse or significant other to put up a total of $100,000 into your QRP without any tax consequences. So when you're having a great year financially, we'd suggest putting $50,000 in. And if you have ever had a year that's not so good, you can put zero if you choose. The choice is yours, and that's the flexibility that I was talking about earlier. So you can put as much as $50,000 per year or as little as zero without any tax consequences. Let me explain in detail the definition of new money. New money is you earn the money at a job or in your business, you received a paycheck from your work or to you, and a portion of that money goes into your retirement account. I earned it, that's new money. So the maximum amount of new money you can contribute to a QRP annually is $50,000 per person. Again, which is substantially more than you can with an IRA. As a matter of fact, it's 9 times more than you can contribute with an IRA. Then there's existing money. Existing money is the money that's sitting in some other type of retirement account. For example, an IRA or a 401k or any other type of retirement account. It's what we call stagnant money. You're probably no longer contributing to it, but it's sitting there and you want to do something with it. There's absolutely no limit to how much existing money you can contribute to your QRP. You can roll over an unlimited amount of money and assets into your new qualified plan with no fees or tax consequences whatsoever. We've helped many of our clients roll over 3, 4, even as high as 7 different previous accounts into their new QRP. Different banks, different IRAs, 401ks from previous employers. Now all of your retirement money is in one account, and now you have control over that one account. No more fees from anyone on any of them. So, just to make absolutely clear, there is no limit whatsoever to how much money you can roll over into your new QRP from an existing retirement account. Let me summarize with 3 points for absolute clarity. Number 1, you can contribute up to $50,000 per person per year in your QRP with no tax consequences. Number 2, you can roll over an unlimited amount of money and assets from current and existing retirement accounts into your QRP with no tax consequences. And number 3, you can earn an unlimited amount of money within your QRP with no tax consequences. For example, let's say you have $100,000 in your QRP, and this year you invest that $100,000 and it makes $100,000 profit. You still have no tax consequence, and it doesn't affect how much new money you can contribute. So there's no limit to how much money you can make within your QRP without tax consequences. Now, for those of you at retirement age, you can actually start withdrawing money from your qualified plan at age 59 and a half, and you're required to start taking money out at 70 and a half. The rules are the same as they are for any 401k. You can start a QRP at any age, and you can always add money to it at any age you want. On a side note, if you are a high net worth individual, we can show you a system within your QRP where you can contribute much more money, up to $149,000 per year without tax consequences. You can even start a QRP for your kids. Imagine what your life would be like right now if your parents had set up your own QRP when you were, say, 15 or 18 years old. Imagine what your kids' life would be like when you set up their QRP right now and teach them how to become completely financially independent now, rather than waiting for some distant time in the future. This is a powerful gift for your children and your grandchildren. What I'm going to do right now is show you a comparison of a regular IRA versus a qualified retirement plan, side by side, so you can see the difference to your financial well-being. Qualified plan versus an IRA. Number 1, with your QRP, you have the flexibility to borrow from your retirement account. With an IRA, you absolutely cannot borrow from your retirement account. You're allowed to borrow up to $50,000 from your QRP. You now have become your own bank. So you can borrow $50,000 from yourself, set a reasonable interest rate, and pay yourself back within 5 years. Now you always have access to your own money when you need it without penalties or fees. Again, with an IRA, this is not allowed. Number 2, debt financing with real estate without tax consequences. With a QRP, you can finance real estate with no tax consequences, which means this will greatly accelerate your financial success. In other words, you safely make a lot more money in a much shorter period of time. With an IRA, you can finance real estate, but there's a significant tax consequence, which greatly damages your profitability. This means with an IRA, you make a lot less money and it takes you a lot longer to achieve financial success. Number 3, your deductible contributions in 2012 is much higher in your QRP than an IRA. Deductible contributions in 2012, as of this recording, is $50,000 per year in your 401k QRP, and even more for high-income clients. With an IRA, regardless of how high your income is, the maximum you can contribute without tax consequences is only $5,000. You literally can contribute 10 times more with your QRP without tax consequences than you can in an IRA. What this means to you is that you have much more money for your retirement in a much shorter period of time with a QRP than with an IRA. So you can retire sooner and you can retire richer because of your QRP. Number 4, protection from creditors. Your QRP gives you 100% asset protection against anything and anyone, including but not limited to the IRS, creditors, bankruptcies, you name it. With an IRA, 100% of your money is always at risk. You can lose all of your money in an IRA to creditors and the IRS. I'm sure you're like me when it comes to your hard-earned money. When it comes to your financial security for you and your family, it's extremely important never to put your precious assets at risk, like with an IRA. It's important to know no matter what happens, your hard-earned money is never at risk. It can never be taken away by anyone for any reason when you have a QRP. Number 5, the ability to purchase life insurance in your retirement account. You can hold life insurance in a QRP. You can't hold life insurance in an IRA. Number 6, your ability to be your own administrator and trustee. Write and sign checks. Be in direct control of the assets in your retirement account. Yes, with a qualified retirement plan, not permitted with an IRA. Number 7, employees within your retirement plan. You can have employees in your qualified plan. You can contribute up to $16,500 per employee per year. This is not permitted in an IRA. Number 8, catch-up contributions. If you're over the age of 50, with a QRP, you can add an extra $5,500 per year without tax consequences. With an IRA, you can only contribute $1,000 a year. So, if you're behind in your retirement planning, you can catch up 5 times faster with a QRP than with an IRA. When you look at this comparison of a qualified retirement plan versus an IRA, you can easily see that a QRP is far superior to an IRA for financial security and financial independence. Once a person is aware that you can set up your own QRP, and if that person still leaves their money in a regular retirement account, basically what they're saying is, I want to earn less money with a lot more risk, and I want to take much, much longer to achieve financial success. Who would be satisfied with that? Not me, and surely not you. Once you know the facts, it's an easy decision to set up your QRP right now because it's absolutely the best option for your financial success. A fun and simple way I like to compare it is this. Ask yourself, if you were shopping for a new car, let's say a brand new Honda Accord, and let's assume that you have 2 dealerships with exactly the same car. They both want $20,000, and you're trying to determine which dealership you're going to purchase the car from. So let's look at it this way. Dealership A has a Honda Accord that gets 22 miles to the gallon. Dealership B has a Honda Accord, the same one, that gets 84 miles to the gallon. Dealership A's Honda Accord is $125 a month to maintain. Dealership B has the same car with no maintenance fee. Dealership A, you have to ask permission to leave the city limits and let them know exactly when you're coming back. With Dealership B, you can go anywhere you want to go and you don't have to ask anybody or tell anybody when you're coming back. Obviously, the answer is very simple. Dealership B is where you want to be. That's the question you're going to ask yourself on whether you want to start your QRP now or wait till later. So what does it mean when you're the trustee of your own retirement account? What are your responsibilities? This is a great question. And the first and most important thing is you're going to keep records just like a bank account. Remember, what goes out must come back in. When you have real estate, tax lien certificates, gold, stocks, or any other type of investment, you simply track the purchase price, then the corresponding sale price when that occurs. Second, if your retirement account has over $250,000 in assets, then once a year, you'll file a Form 5500 with the IRS. Any CPA or accountant will file this form for you. The Form 5500 basically certifies that your tax returns within your qualified plan are good to go. It states that everything was reported correctly and gives you the seal of approval. After 3 years, because you filed your Form 5500, the IRS can never go back and challenge that year's taxes. It's locked up forever. That's called peace of mind. When you set up your qualified retirement plan, you'll receive a QRP Starter Kit that explains your responsibilities in complete detail. You also get immediate access to QRP and Associates members only website with tutorial videos that explains everything you need to know about your new qualified retirement plan. So now let me walk you step by step on how to set up your own qualified retirement plan. There are two very minor requirements. Number one, a new QRP at a minimum needs to be attached to a sole proprietorship. That's you. You're the sole proprietor. The sole proprietor is the plan sponsor. At the end of my presentation here today, we're going to have a question and answer session with Mr. Michael Haas, the founder of QRP and Associates, and we will discuss the simple setup process in complete detail. Number two, some of our students already own an existing company. You may already have an LLC, a C corporation, or an S corporation. If you do, then your entity will adopt the new QRP. QRP and Associates will walk you step by step through this process as well. It's a very simple process. When you fill out your order form for your new QRP, which is just a one-page fill in the blanks, if you don't know the name of the company that you're registering your qualified plan with, it's no big deal. You'll just fill out all of the other information and submit it. Then, I'll have one of our QRP experts call you and walk you through getting the balance of your paperwork. Depending on how quickly you respond to us, we will have your new QRP trust documents within about 10 business days. This is what your QRP looks like. It's about 250 pages that were meticulously designed and put together. And this is extremely important. These QRP trust documents are IRS approved. You're going to receive a trust document book exactly like this for your QRP. When you receive your QRP trust documents in the mail, you'll also receive an important information sheet that explains step by step on how to open up your QRP bank account. There's also an instruction letter that you give to the bank that clearly explains to the bank the type of account you need to open. Again, it is a very simple and straightforward process, and you can open up your account at any bank of your choice. And if you have any questions or challenges along the way, just give us a call and we'll guide you through it. So, the first thing you're going to do to set up your QRP right now is fill out the one-page online order form. If you don't have your company name yet, just leave it blank and one of our QRP experts will call you up and help you out with that portion. Once you fill out the order form, the first thing that you're going to receive is your QRP Starter Kit. We're going to give you immediate access to this important information while your QRP trust documents are being created. This powerful information package will give you all the important details you need to know about your new QRP, and will also answer any questions you may have. Included are 2 QRP audio trainings that you can download right now, and you can listen to me interview Michael Haas, the founder of QRP and Associates, one of the most brilliant financial experts I have ever met. He's literally the nation's leading expert when it comes to qualified retirement plans. He has over 25 years of experience. So, while you're waiting for your QRP trust documents to arrive, we highly recommend that you listen to this powerful training. It will give you all the information you need to know on how to benefit most from your new QRP. Also, we're giving you immediate access to QRP's member-only website. It's an amazing resource center for all your QRP needs. There is a series of highly informative training videos on every aspect of your new qualified retirement plan. For example, there's a video training on how to borrow money from your QRP. There's another video training on how to be your own administrator and the responsibilities as an administrator. There's a video training on rolling over a retirement account into your new QRP. There's also a video training on your responsibilities as a trustee of your QRP. Just to name a few, we also have answers to all the most commonly asked questions that people ask about their new qualified retirement plan. The QRP Members Only website is an amazing resource center for all your QRP needs, and you now have a lifetime access. We're also going to give you lifetime expert QRP support via email and the telephone. Anytime you have a question, all you have to do is send us an email or pick up the phone and call. One of our QRP experts is always ready to help you and answer your questions. And finally, we're also giving you our standard, no hassle, 100% money back guarantee. This is very important, so please pay close attention. If for some odd reason you decide this plan isn't for you, and I'm just not sure what that possibly could be, but don't worry about it. We'll cancel your order and give you 100% of your money back. We're giving you our standard no hassle money back guarantee. The investment for your one-time setup fee to set up your qualified plan through QRP and Associates is $4,000. That includes your QRP trust documents, your QRP Starter Kit, lifetime access to the QRP member-only website and resource center, and lifetime QRP expert support, along with our 100% money-back guarantee. For everyone who sets up their qualified retirement plan through this special presentation today, you're receiving over a $1,500 discount. So, your investment is only $2,495. This is an exclusive offer that's only available through this presentation and the U.S. Tax Lien Association. Everyone else who sets up a qualified retirement plan with QRP and Associates outside of our organization pays $4,000. As a matter of fact, it's absolutely impossible to set up a qualified plan with QRP and Associates for less than $4,000 unless you come through our organization. This is our exclusive contractual agreement with QRP and Associates. So, your investment today is only $2,495. And remember, the government is helping you pay for your one-time setup fees in two different ways. First, there's a tax deduction for setting up your QRP. Let's say you're in a 35% tax bracket. That's a very typical tax bracket for many people. If you're in a 35% tax bracket, the government basically puts $873.25 right back in your pocket. Now, the second part is great. There's also a congressional tax credit of $1,500 for setting up your QRP. You get a $500 tax credit each year for the next 3 years. So the government is giving you another $1,500 just for setting up your QRP. At the end of this year, your true out-of-pocket cost for setting up your QRP is only $1,151.75. That includes over 2 years of $1,000 in tax credits, and you never incur another administration fee again. This is important. QRP will never ever charge you an administration fee for your plan. You will never pay an administration fee, management fee to anyone ever again for any reason whatsoever. It's your plan. You own it. You're the administrator. You're the trustee. You are now in complete control of your own financial freedom. To get started setting up your QRP right now, just push the button that says Set Up My QRP. When you push the button, it will take you to a one-page online order form. Just fill out the information, and you're on your way to having your own qualified retirement plan. And remember, if you don't know some of the information, that's okay. Just fill out the information that you do know, and then we'll have one of our QRP experts contact you and help you fill out the rest. It's really that simple. So click the button right now that says Set Up My QRP. And while you're filling out the form, I have Michael Haas, the founder of QRP and Associates, here in the studios to answer the most important questions we get about qualified retirement plans. Welcome, everybody. I'm sitting here with Michael Haas. Michael Haas is the founder of QRP Inc. And Michael Haas has been working with people like you for over 27 years and helping them set up their own retirement accounts and be their own administrator and trustee. Michael, you're considered one of the nation's leading experts on this subject, and we've brought you into the studio to help out with some of the questions that our students have on a regular basis. So let's go through some of this, if you wouldn't mind a little bit. First of all, probably the biggest question is, how much money can you put in a qualified retirement plan? How does that work exactly?
Sean, that's a great question. And the major difference between a qualified retirement plan and let's call it just an IRA, as far as the contribution, is substantial. The maximum amount you can put away per person per year in a qualified retirement plan is $50,000 if you're under age 50, and you can put away an additional what they call a catch-up contribution of another $5,500 if you're age 50 and older. So that's a total of $55,500. So in IRA, on the other hand, you've got $5,000 if you're under 50 and $6,000 if you're 50 and older. So you can see that it's about 10 times more putting money into a qualified plan versus an IRA.
You know, what a lot of people don't realize, I should say, is they think that an IRA is the only option out there. Do you run into that very often?
Sean, that's common. There's many people that think not only that an IRA is the only option, but even that the only investments they've got are stocks and bonds. So that this qualified plan offers a lot of flexibility, not just in the contribution, but
what
even what you can do with the money once you got it in there.
A question we get on a regular basis, and you know where I'm going to go with this, is the IRS. Being that our students are going to be their own administrator, their own trustee, what forms, if any, do the IRS require from you that you're managing your own plan?
Well, Sean, there's only one form that's required to file with the IRS. It's a fairly simple form. It's due once a year, and that form is a Form 5500. And it's important to know that many people are not required to file this form.
So who's required and who's not required? How does that work?
If your plan has assets, which is cash, real estate, whatever assets are in your plan, if those total assets are $250,000 or more, then you're required to file a Form 5500.
Okay.
Or if you have one or more employees, and the employees are not yourself, your spouse, or your children, it would be another common law employee, for example.
So in other words, if I have $100,000 in my IRA, I roll it into my new QRP, I am not required to file this 5500. But if I have more than $250,000, they require this. It's a fairly simple form?
It's a fairly simple form. Almost any tax advisor with our clients could go ahead and file that form, and it shouldn't be that time constraining or difficult.
What are the advantages of this form?
Well, one of the biggest advantages is that when you file this form, you start what's called the statute of limitations running. And the statute of limitations is important because it limits the number of years the IRS has to go back and audit your plan documents and audit your transactions within your plan.
That's a good thing.
That's a good thing. And they've got 3 years to do that.
So if I have less than $250,000 in my retirement account, and I'm with qualified plan that I'm setting up here with us, can I still fill out the 5500 form?
Yeah, you still can, and in many cases you may want to, just for the very reason I mentioned before, that you start the statute of limitations on start running, and so you have the 3-year limitation restricting the IRS from going back and auditing the plan.
Fantastic. You know, another question we get all the time, Michael, which is a logical question, is I have a company, or I worked at a company, I have a retirement account with them, a 401k, what have you, or I have an IRA with a bank. Now that I've opened up my own qualified plan where I'm the administrator and the trustee, I want to get that money over there, what they call a rollover. How's that process? Is it simple, and what do you recommend?
Sean, the process is fairly simple, but there are a couple things that everyone should know.
Mm-hmm.
And one of the first things you should know is that there are 2 ways of doing a rollover. And the one that I would prefer, and most tax practitioners would prefer, is that the rollover be done as a direct trustee-to-trustee transfer.
Right.
In other words, the money comes out of your existing plan, whether it's an IRA or another qualified plan, wherever it's sitting, and you cut the check or wire the money directly into the name of the new plan.
Okay.
Okay? And so by doing it that way, you avoid any tax consequences, and it's a very simple trustee-to-trustee transfer. The forms are easy to fill out. The custodian or
knows
the
what to do.
knows what to do. They have the forms there. You fill them out and just roll the money over.
They might not like you moving the money out of their control into your control, but they know what to do. Is that correct?
They know what to do, yes.
Okay, good. All right, Michael, this is great information. The one thing that we get, I filled out the forms, I've got my QRP information in your hands. How long does it take QRP, you guys, to get the documents and the plan set up and in the client's hands?
Well, Sean, once the client completes all the information that we need to start the preparation of the plan documents, which is not very much information needed
Right.
at all. But once we get that information, it really isn't going to take any more, at the most, probably 10 business days before the clients receive their plan documents.
So I'm filling out the forms right now. I get all the information in there, pertinent information like tax IDs, names of the business, all that stuff. You're going to have that plan in their hands within 10 business days.
Within 10 business days.
That's
Yes.
fantastic.
And usually before that, but 10 business days is a safe number to use.
Good deal. If you have not filled out the form to set up your QRP yet, please click the button now and start filling out the form. Remember, the investment to set up your QRP through QRP and Associates is $4,000. But through this special presentation and our exclusive agreement with QRP and Associates, we're setting up your QRP today for only $2,495. Your investment includes your QRP trust documents, your QRP Starter Kit, and lifetime access to QRP members' only website and resource center. A lifetime expert QRP support via email or telephone, and our no-hassle 100% money-back guarantee. So click the button now. While you're filling out your form to set up your new QRP, Michael and I are going to answer some more important questions. Okay, so Michael, one of the big questions we get, I love this one, the fact that everybody knows, wow, I can borrow my own money from my own retirement account. Now that I'm the trustee and administrator, it's no longer locked up. So this is a big question we get. So how does that work? Is it simple? What's the process? How much can I borrow? How does that work?
Sean, that's a great question. One really benefit of a qualified plan is the flexibility we have in the qualified plan
Right.
to actually borrow your money out. And that's really important because people need to understand that because you make a contribution to a qualified plan doesn't mean that in case of emergencies, you can't get the money back and take care of some personal emergencies that come up where you need the money. So the process is fairly simple, and the flexibility in the plan even allowing you to do that, which is not the case in an IRA. You cannot borrow money out of your IRA like you can in a qualified plan. So that flexibility has allowed a lot of people the confidence to put money in a qualified plan that they may not have had otherwise.
So how much money can you borrow from your qualified plan, Michael?
You can borrow the lesser of $50,000 or 1/2 of your vested interest.
Wow. Okay, and then do you become the bank, right?
Right.
Kind of, you borrow your own money. So you set the interest rate. How do you figure the interest rate on that?
Well, the interest rate has to be a market value interest rate. And in today's rate, for example, it may be somewhere around 6 to 7%.
Okay, and you're paying yourself, yourself the 6 or 7%, correct?
That's right. You write a check personally to your plan in payment of the note. And the note has to be paid over no more than 5 years, market rate of interest, and the payments can be made either monthly or quarterly.
So let's talk about simplicity of this. If you're the administrator and you're the trustee, you're looking at probably 1 or 2 forms you have to fill out, is that correct?
Yeah, you have to sign a note, and then there's actually a loan application, and that's pretty much it.
So you got to approve yourself for a loan?
Pretty much, yes.
That's a little easier than the banks are doing right now these days, isn't it?
You have a much better chance of getting the loan, too, probably.
Absolutely. Okay, Michael, let's just go with this scenario here. I'm currently working at a company. We have a 401k at this company. I'm contributing money to that. Can I roll that money over into my QRP? And if so, or if not, can I have 2 separate accounts going? I mean, how does that work? This is a big question we get.
Well, Sean, let's talk about, first of all, everyone needs to know that just because you're contributing to another qualified retirement plan at your current employers you can still set up your own qualified plan. In fact, many people do that,
Right.
especially in today's economy. Many people have other jobs and other outside sources of income.
Right.
So we can not only shelter the money that you're working for in your current employer, but other income that you have coming in can also be used to shelter from taxation by making contributions to your qualified plan.
Fantastic. So in other words, if I've got this money over here, I can continue to contribute over here, and then I can also, if I'm doing tax liens and deeds over here, I can have a separate plan over there. My question to you is, what if I'm over here and I don't like my company's plan? Can I roll that money over if I'm still working at the company?
Well, that's where it gets a little tricky. Most qualified plans and most employers have a restriction that before you can roll the money out, you have to be at least 59 years and a half. So if you're still working for the company, you probably have to be 59 and a half before you can roll the money out. Once you're terminated, though, you can roll the money out at any age and roll the
Terminated?
money over.
What if they just quit?
Well,
Either way is going to work on
either
that,
way
right?
would probably work, yes.
Fantastic, fantastic. Now, if I've got a plan at my company and I'm contributing money to it, can I set up a QRP before I have to fund, like I fund it with maybe $100 just to get it set up? Is that possible to make that happen? And as I make money outside of my company, start adding to that. My big question is when do you set up a qualified plan? And I guess the question I've always said is, well, you can't fund something that doesn't exist. So do you recommend setting up the qualified plan so they have that available for that rollover?
Sean, setting up your qualified plan even before you start generating a lot of taxable income is a great idea. And I found that it now becomes a goal for someone, because once you've got that plan set up,
Right.
you're going to be thinking about funding it. You'll think about saving money by funding a plan that's going to be there for you when you want to retire many years down the road. So having that target goal set up, setting up your plan now is a great idea.
Okay, another question I get, and it's back to I've got a plan, I got the new plan. One of the questions is I've already got a plan. Maybe it's a IRA again. Maybe it's with one of the other administrators out there that's charging me fees. Maybe it's in my company and I no longer work there, but I have assets in it, Michael. I have a mutual fund. I have real estate. I have these types of things in there. Can I move those assets without cashing them into my new QRP?
Good question, Sean. Yes, you can, and we call those in-kind rollovers. So remember,
They're called an in-kind rollover. Okay.
in-kind rollers. So it's not just cash that can be rolled over into your new qualified plan, but real estate, tax liens, securities, even if you have deeds of trust on properties, for example, those can all either be assigned or retitled to the name of your new plan and be rolled over. So it's important that people know you don't have to cash those assets out.
Right.
You can roll assets other than cash into your new qualified plan.
Okay, now is this a difficult process, or is it, again, are we back to there's forms that need to be filled out and the other trustee will know how to transfer those over along with QRP, correct?
Correct. Yes.
Okay, that's what you're doing.
It's not a difficult process. In real estate, for example, you would simply do a quick claim deed over to your plan. If it's a note or some other assets, you would just assign it to your plan and make sure you notify the people paying on those notes that they need to make the payments to the new plan. And if it's stocks, brokers are very, very familiar with just retitling the name of the account, whether it's mutual funds or individual stocks, over to the name of your new plan.
Fantastic. That's great. And Michael, here's a question that we get on a regular basis, and everybody asks me with a grin and a wink. I've already purchased a piece of real estate, and I'm about ready to make a big profit on it. Can I transfer that into my retirement account? Or we have a vacation home. Can I move that into my retirement account, or what have you? What are the restrictions of transferring some of the assets in there?
Sean, those are what we call prohibited transactions. And so personal assets, as much as we all like to transfer as much of our personal assets into this plan, especially once you realize it grows tax deferred,
right,
you can't do it.
You can't do that. So unless you've purchased that asset with qualified money, means from another retirement account or what have you, or from your new qualified plan, you can't just move it in there and retitle it.
If the assets were in another qualified plan, like we said before, you can roll that over.
Right.
But if the assets are held in your personal name, no, unfortunately, you can't
You
transfer
can't do
it in
that.
the plan. No.
You can't do that. There's no loopholes around that one, is there?
No, there's not.
Very clear on that one. Great question. If you have not filled out the form to set up your QRP yet, please click the button now and start filling out your form. Remember, the investment to set up your QRP through QRP and Associates is $4,000. But through this special presentation and our exclusive agreement with QRP and Associates, you're setting up your QRP today for only $2,495. Your investment includes your QRP trust documents, your QRP Starter Kit, and lifetime access to QRP members only website and resource center, a lifetime expert QRP support via email or telephone, and our no-hassle 100% money-back guarantee. Please remember the most important benefits of having a qualified retirement plan. You can contribute 9 times more money without tax consequences, which helps you make more money in a much shorter time period. You have 100% asset protection. No one can ever touch your valuable assets for any reason whatsoever. You can leverage real estate without tax consequences, which allows you to safely make more money in a much shorter time period. You can hold life insurance in your QRP. You can put an additional $5,500 per year in catch-up contributions without a tax consequence. You have 100% control over your own money and your own assets, and you will never pay another administration fee as long as you have it. Your QRP gives you an opportunity to retire early and retire rich and truly live the lifestyle of your dreams. If you haven't done so already, please click the button now and begin setting up your QRP right now. As always, we look forward to helping you achieve all of your financial dreams.